Welcome to BAM It with John Michael and Mari, covering all things business, accounting, marketing, and IT. The place where businesses and entrepreneurs find the forest through the trees.
Hello and welcome to BAM It. This is, of course, Mari Peterson with Marketing Outpost, and I have with me
John Michael Kledis with Peridot Consulting.
I'm just checking to make sure he knows who he is, everybody.
Well, that pause makes, I never know if you're going to say my name or not. So I have to you start looking at me. So I have to jump in and say my name. Okay.
So again, this is John Michael's way of overthinking things. So I want to make sure that everybody's prepared for today's episode. Go ahead, get up wherever you are, unless you're driving, and do 10 jumping jacks. Make sure you go get a full pot of coffee and prepare yourself because you're going to be so excited. Today, we're going to talk about tax notices.
I love Mari's feigned excitement. I guess feigned would be not the right word. Her very bad attempt at being sarcastic when she's being serious. It's that joke that people say. It's like, in actuality, I'm mean. People just think I'm sarcastic.
I'm both.
That's the way podcasts work. People are clicking on this because they see that it's about tax notices or representations. So they want to listen.
Not if I give it a fake title. I think from a marketing perspective, we need to do podcast clickbait. We need to change the title of this episode.
We don't want to we don't want to do that because then that will turn people off and say, wait a second, we thought they were going to talk about something really cool and interesting, but they roped us in or are talking about tax notice.
Well, no, because then it's just so interesting they have to listen.
So it is interesting.
It is interesting, but I think that at first people don't know about tax notices and all they are is scared. You might trigger some people to be like, I can't listen to that episode.
Yeah, well, or maybe it would say, hey, maybe I should listen to that episode because I want to know the behind the scenes of tax notices and representation.
So I guess the first thing you would say to somebody is do not be afraid and do not freak out.
That would be the general rule of thumb.
So we almost skipped over an important section called Interesting Facts out of our podcast segment. But I kind of think your whole topic is an interesting fact.
Are you trying to make up for your feigned sarcasm at the beginning?
Hey, Mark? I have an opportunity for a do-over.
Yeah. I mean, tax notices, to your point, they have the connotation of being scary. Some notices are the opposite of scary. There's plenty of times that you might get a notice that it's good news. You have more money coming to you or something. But yes, anytime you open that dreaded mailbox and you see that, the return address, that it's from the IRS and it can be dreaded, don't panic. It can mean anything from just an informational to, we changed your address to you're getting more money back to potentially, you owe more tax or there's something wrong. And I've seen some terrible notices.
Well, let's talk about that. How does the IRS notify you? Do they email you? Do they call you? Do they send an agent to your house?
Yeah, the FBI storms your house and knocks down your door and throws a tax notice in your face. Yeah, so the IRS will only contact you through mail.
Notice nobody's never made a tax superhero in a cape.
Yeah, well, that's called enrolled agents and CPAs, Mari. No, so the IRS, it is important to note that the IRS and most state agencies, unless some random state I don't know about does otherwise, it's all through the mail. And it's a very easy to verify. They'll have the phone number on the notice. You can call and if you just want to make sure it's valid and not a scam.
What do they do if they can't mail you? Let's say you don't have a P.O. box. And
everybody's got
way out in the middle of nowhere.
Well, if you are interacting with the IRS or a tax agency in some way, i.e. filing a tax return, then you have an address and you have a mailing address. So an example of that is we've mentioned before, I've got clients that live in an RV. Well, they do have a home, P.O. box or something, and they get what they call mail forwarding services that will scan their services and email it to them.
What
Or
if you've
scan
been
their-
traveling and you go to Europe for 2 months and you have received a tax notice in the meantime?
Well, there's plenty of times where that exact thing has happened. Somebody comes to me and drops like 10 tax notices on my desk and says, "I just got back in town and this was in my mailbox."
What do you do?
Well,
Do they understand that?
Well, I mean, it all is dependent on what the notices are about. But to shortly answer your question, sure, it doesn't mean that, oh, we're not going to charge you interest and penalties because you just didn't know about the tax notice. But it's as long as you respond. Now, I mean, you got to think. I've gotten people that have gotten tax notices from 5 years ago and just kept ignoring them.
That's the person that sticks their head in the sand whenever there's a problem.
So the number one thing when it comes to tax notices is do not ignore it.
Do not stick your head in the sand.
Yeah, the old
seek help.
The old saying, "Out of sight, out of mind," doesn't bode well with tax notices.
Get help somewhere.
Yeah. We'll talk about dealing with notices in a minute, but let's just talk about like why you would get one. According to the IRS, you get a tax notice for basically anything, but to give you some bullet points, if you have a balance due, if you have a larger or smaller refund due, if they have questions about your tax return, if they need to verify your identity, if they need some more information, if they change something on your tax return, or they're just notifying you that there's delays in processing your return. And what they tell you to do, what the IRS tells you to do, is to read the notice, obviously, respond by the date requested to minimize interest and penalties. Generally, every tax notice, you have 30 days to respond. They say to pay as much as you can, even if it's not all of it, just respond with a payment. And that's good advice. I'll get back to that in a minute. Obviously, keep a copy of it, contact them with questions, and verify if it looks suspicious. We alluded to that. They only send letters out. You can go to irs.gov and they have a phishing page that you can look at. There's a phone number on the notice you can call. If you don't trust the notice, go to the irs.gov website and call them and say you got a notice just to verify that it's there. The IRS only contacts with letters. They don't call you. If you get those scary phone calls or voicemails saying they audited your tax return, you owe $5,000, or they're going to knock down your door tomorrow and send out the FBI, then that is a scam. And
what does the IRS do with those? Do they actively try to track them? Because that would seem highly, highly illegal.
Yeah, it is. And I don't know the stats, so this isn't a true stat, but most of them are not domestic oriented. I mean, I was just listening to another podcast about a scam very similar to this that was based out of Costa Rica, where they will call and follow up and do they're like boiler rooms of people calling a million times, and finally one person gets the bait, and it's $1 million industry in these countries, and they can't arrest these people until they get to like American soil. So a lot of times they just change it up, but that's just part of we talked about fraud in last season. It's just another aspect of that. But there's ways to verify if you're not sure, if it doesn't make sense. A lot of tax notices, 100% legit ones, won't make sense sometimes, and that's where I come in. Mari's yawning over here.
Where do the tax notices come from? Is it a central office? Is it where do they?
Well, the IRS has 20 big, more than that probably, offices where they can originate. You can get one from Cincinnati, one from Utah, one from there's a million different offices. And
is it automated, or is there a person back there reviewing your file and says, "Oh, this person needs a tax notice," or is it automated in some way?
Well, yeah, it's automated. We'll get to the details of that in a minute. We're jumping all over the place here on tax notices, but yeah, most tax notices are computer automated. We'll get to the specifics of that. But back to what the IRS tells you to do, and I wanted to get back to that point of when they say pay as much as you can. I would say the first thing you should do, if you had a professional prepare your tax return, the very first thing you should do is contact them, because they can look at the notice, look at your tax returns, kind of theoretically quickly decipher what it is that's going on. If it's just a collection of money, they're like, look, you owe us, another $300. That's a common thing. And a lot of times it's just extra interest. If you owed tax when you were filed your tax return and say you extended, they start charging interest from April 15th. So if you file your tax return October 15th, there's interest from April 15th to October 15th. So there's a lot of times you're just going to notice saying, look, you owe us another $300. And it's just interest, and there's nothing you can do about interest. If there's penalties, the IRS and state agencies can talk to you and negotiate on penalties. Interest, they cannot. The only way you get rid of interest is if the tax that the interest is applied on, you end up getting to the fact that isn't due. I've seen a bunch of scary notices out there, and we'll talk about some of the common ones. One is probably the most common is a CP 2000 notice. A CP 2000, so CP stands for computer paragraph. CP stands for computer paragraph. So if you see any notice that has the notice number and it starts with the CP, that means that a computer kicked it out.
So that's automated.
That's
triggered
automated
by some formula.
Well, yeah, triggered by something, and we'll talk about these different ones. But CP 2000s typically come out in the summer, 18 months after you filed a tax return. So if we're in the summer of 2019, you'll be getting CP 2000s for your 2017 tax return. And it usually takes about 18 months before they start kicking out, because that's how long it takes for everything to kind of flush through the system. And what the CP 2000 catches is if you got a 1099 or you got a W-2 or you got, another tax document from a third party, but it didn't get matched on your tax return. So it's a common notice, probably one of the most common, and it's also common to scare the heck out of people and also common to be wrong. And I'll illustrate what I mean by that. Say, Sally taxpayer gets is a self-employed person.
So hold on just a minute.
Yeah.
Are you saying that sometimes the IRS is wrong?
I'm saying sometimes the computer matching system is wrong. And it's only because the computer, it's not that anything's wrong, but they just don't realize what they need to match. So that's what so Sally taxpayer, say she's a, self-employed individual, say she does piano lessons. Well, it's probably a bad example, but anyways, say she, makes $25,000 a year doing this, and she puts $25,000 on her tax return. That's great. But say somebody sends her a 1099 for $5,000, but she didn't realize, say they just sent it to the wrong address, say they did something, because when you do 1099s, the IRS gets a copy of it and then the taxpayer gets a copy. But say for whatever reason, she didn't get that 1099 on her tax return for the computer to match, but the $5,000 was on there. It's part of that $25,000. So she did report the income and pay the tax, but she didn't get the 1099 to match it. So she could very potentially get what we call the CP 2000 saying, look, we see this $5,000. We didn't see it on your return. You owe us, another $1,000 for tax and interest and penalties on this $5,000. And some people might see that and it might be scary, a notice saying you owe us $1,000. And the wrong thing to do would be to hurry up and pay it right away because you're scared of the IRS. The right thing to do is talk to your tax preparer. The tax preparer will just send a letter saying, look, it's already reported here on Schedule C right here, and the tax has already been paid. And the IRS will respond saying, okay, thanks for updating our information. So that's an example that CP 2000s are wrong. I've seen some CP 2000 notices that say that they owe over $300,000 of tax, and in reality, they owe zero. And the biggest example of that is when it comes to selling stocks, the IRS will see the proceeds, but they don't see the cost basis. So say if somebody, like a John Smith taxpayer is a day trader and he's just got $1,000 that he likes to play around with, and he buys and sells this $1,000, every day for a year. But he's buying something for $1,000, he sells it for $1,000, so he really didn't make any money. Then he buys something else for $1,000, sells it for $1,000. Say at the beginning of the year he started with $1,000. At the end of the year he's got $500. In reality, he lost $500 through his fun and games for the year. But if he was doing this every day, the IRS just sees the proceeds. So the IRS will get what they call a 1099-B, saying that he sold $352,000 worth of stock. And they don't see the fact that his cost basis is $352,500.
That's why when you go to the casino, you want to make sure you use your card, because then they track the money going in as well as the money that you got and offset it, and will send you a statement.
Yeah, a little bit different.
Why not? It's the same thing during the day.
Well, yeah, but
you
some
end
states
up winning all these jackpots, but then
some states don't allow
say.
gambling losses as a deduction.
What about North Carolina?
North Carolina, you can, but I think they're trying to get rid of it. So you got to be careful with gambling. But my previous point, that guy would get a CP 2000 for $350,000, saying he owes $100,000, and it would scare the heck out of him. In reality, it doesn't. Gambling is a different thing. Yeah, sure, you can deduct gambling losses to the extent of your winnings on the IRS. So you definitely want to keep track of that. Most people have losses more than winnings, and it's in where you deduct it's different. It's never as great. It's itemized deduction. But anyways, depending on the states, you got to be careful, because they may not allow a gambling loss. So if you do the same thing and gamble the same $1,000 a million times, and you're just you're not a professional gambler or anything, then you potentially could have a really scary tax liability, depending on the state rules and everything.
So every now and then the computer system at the IRS is not correct.
Yeah, and if you respond to any notice, it kicks it out of the computer system, and it causes a human to actually look at it. And at that point, a little bit of common sense can be applied. So, but let's talk about some of the other notices and stuff. But let's take a quick break before we do that.
This podcast is brought to you by Peridot Consulting and Marketing Outpost. Peridot Consulting offers a new paradigm in accounting services. We work with individuals and businesses toward prosperity and financial happiness. Please visit www.peridotconsultinginc.com for more information. Marketing Outpost provides strategies to solve problems and strategies to grow your business. Please visit www.marketingoutpost.com for more information.
All right, so we're back, and during our break there, Mari and I were talking about some, just worst case scenarios and scary stories, and there's plenty of those. There's plenty of those situations where people haven't filed for years, people owe a lot of money, and there's a difference between tax notices and collection notices. Collections means that, it's not an argument about the tax due. You owe this tax, and now we got to deal with it. And there's different ways to deal with that too. And I'm kind of referencing representation here a little bit. But if you owe a lot of money to the IRS, there's payment plans. If you owe under $50,000 to the IRS, you can go on an automatic payment plan with them, to where as long as you have it paid off in 72 months, then they're accepted. So you basically take your balance, divide it by 72, and that's how much you have to pay every month. If you owe more than that, that you just got to negotiate with them directly about the balance due. On that note, we talk about the IRS and sending out these notices. They did recently, in the past year, say that they're going to start using private debt collection agencies. So what will happen is, if you owe money to the IRS and they decide to turn you over to a private debt collection agency, that agency has a lot more rigorous requirements than the average debt collection agency. The IRS will send you a notice saying, look, we're going to turn this over to private debt collection. Here's their information. Here's everything you need to know about them. And they're going to be contacting you regarding this.
And then it sounds like they'll probably tack on a fee or something for that.
Yeah, I'm sure it's negotiated with the IRS. But you can, if you want.
In other words, your tax notice just got even more expensive.
Potentially, not necessarily, no.
Yeah.
But if you just want to deal with the IRS and they put the address of this debt collection agency on the notice they send you, all you got to do is write that debt collection agency and say, no, I want the IRS to handle my collections. And then they have to revert it back to the IRS. So you have a right to do that. And just tell them,
to know.
Yeah, just write a letter saying, I don't want you to do it. And that's, some people, debt is debt. And if you just need to get it paid, sometimes you could work with them and work out something with them. But if you need to work out a long-term payment plan or something, you want to be working with the IRS because they have things they have to do. Like I said, $50,000, they accept it automatically. Penalties, you can ask out of penalties sometimes. That there's a first-time penalty abatement. That if it's the first time you got a notice, you have a large penalty for not filing a tax return, which can be up to 20 or 25% of your tax due. Then you could just ask for a first-time abatement as long as you're current on tax, as long as you're up to date and all your taxes are filed, you can ask for these abatements. And they may or may not do it. If you have cause, if you're like, look, I was in the hospital for 2 years in a coma, please waive these penalties. They probably will. Like I said, they can waive penalties, but they can't waive interest. But there's ways to handle some of the debts that you owe through payment plans. You can ask out of some of it. The biggest thing that some people turn to is what they call as an offer and compromise. An offer and compromise is basically what it sounds like. You owe $100,000 in tax for over the last 10 years and not filing your tax return. And you really can only afford $20,000 because you're just not making much money. The big tax liability that was due as a business you owned and it went bankrupt 2 years ago, and you just don't know, you don't have any other money. You're working as a bag boy right now, and there's just no way you can pay that. You do this offer and compromise, and it's a long form. You send it in saying, "Look, I know I owe you $100,000. Will you take $20,000?" And they go. It's a long process. It's a 6 to 12 month process where you have to send them. It's like going through a bank underwriting. You have to send them all your bank statements. You have to send them all your assets, and they have to basically verify that you, in true regard, have no way of paying this. If you have equity in a home, say that situation applies to you, but you own, your grandmother gave her house that you're living in for free right now. It's totally paid off home. Well, if you have equity in that home of more than the tax that you are due, then you would not qualify for an offer on compromise off the bat. So there's, specific cases that will immediately disqualify you because they're saying, well, you got equity. Go either sell your house or go out and get a bank loan and pay us off. But say they do accept that offer and compromise, and then a year later you win the lottery and win $1 million. They can revoke that offer and compromise and say, okay, you are now able to pay us. You have to pay us the full amount due. So our offer and compromises are good for what they are. But, if you get a windfall, get a big job a year or two down the road, and they find that out, then they're going to go back to the original balance due and say you owe us all of it. So it's not a wiping slate clean, but it is helpful for people that are in a hardship case scenario to deal with that.
I've received tax notices before, much earlier, and I do agree with you. I think that if you address it right away, they are usually very willing to compromise and to work with you.
Yeah, well,
not compromise, but work with your schedule and your ability to pay.
Yeah, just depending on what it is.
Mm-hmm.
The IRS and state agencies, believe it or not, are much friendlier than you think they are. Especially when you get to people. The notices they're scary, they're very dry, you owe this money, you're going to be turned over to collections, and aggressive. Everybody, if you're a tax-paying person, everybody's going to get tax notice. I don't care. I've got clients that, they get tax notices because it's maybe a little bit of interest due, or because that computer matching system just didn't see that 1099, or there's, tax notices aren't because somebody messed up or there's something wrong. Sometimes with that interest, they're going to, it's better to let them calculate it than to try to guess what it's going to be if you're filing a late tax return. What we'll do sometimes is just file a tax return, pay the tax due, and we'll say, you're going to get a notice for interest and penalties on this tax due because it's late. And if that's the case, we'll look at it and deal with it then, because if we we can try to presume that, but it might be wrong. Sometimes it's better to deal with the notice. Or we do that, but we were under a little bit. So my point is, just because you get a tax notice doesn't mean anything's wrong, doesn't mean your tax preparer did anything wrong, doesn't mean that suddenly you're pulled into like a system and thrown into the red box of IRS records of people they're going to look at every year. And because people think this, they think, oh my gosh, I got a notice. I'm going to get audited every year and it's a horrible thing and it's scary. No, it's common. It's very, very, very common to get a tax notice. It happens a lot and not for negative reasons. The IRS is just a very, very big cable company or a very big utilities company, and you owe them money, you owe them interest, you don't think much of it, just take it to the nth degree. And that's kind of, the IRS has to handle millions of processes and tax returns, and it's very automated in their processes because of that. And they have to deal with every tax-paying citizen out there, and the IRS is way underfunded and way overworked, and they're depending on a lot of computer matching systems trying to automate all of this. So what's going to happen, it's not a scary thing. If you do get a tax notice and you look at your tax return and in reality, oh, I did get a $5,000 1099 that I totally forgot about. Well, then you owe tax, and that's the end of it. Or that's not the end of it, but sometimes it is what it is.
So you get all these notices. Are there other kind of common notices that people get?
Well, sure. So there's a couple common CP notices. There's the CP-12. That's them just notifying you of corrections made by the IRS for mistakes on your tax return. There's CP-2501. That's just saying there's a discrepancy on your tax return. They're wanting to have some clarification on that.
This one right here looks really, really scary. CP90, what's that?
Well, that's okay. So you got a notice saying you owe money. You don't do anything about it. You get another notice saying, hey, you owe us this money. You don't do anything. They send out this CP90 saying, all right, we're going to levy your wages. We're going to levy you, and your employer might get a notice saying, look, they owe us tax. We're levying their wages.
Well, that's what happens when you stick your head in the sand and you ignore all the previous notices.
Yeah. So
Is there like a number of notices they send you out before they send this one, like a predetermined?
If there is, I don't know the answer to that, to be honest with you.
It's not like 3 tries and you're out.
Yeah. And I doubt they would probably publish that information. It's probably a little bit of automated. I'll say that, the IRS is way more regimented in that. States are very schizophrenic when it comes to that, even within the same state. In North Carolina, I've had people that, they owe tax and they get 5 notices saying, hey, you still owe us this tax. And then I've had people that before they even get one notice, they get an intent to levy.
That's pretty scary.
It's scary, but that's what I mean is the states are way more schizophrenic compared to the IRS. The IRS has processes, methods, and hoops that they jump through. And a state you might wake up one day and get an intent to levy from a state or just another tax notice.
Here's one that's interesting. CP01. Now, you would think that would be like the number one notice. These numbers are all out of whack. I don't know how they've determined this numbering system for notices, but explain the CP01 notice.
Identity theft. They're monitoring your account for potential fraud. I got something similar to this with a client from a state recently, but they're basically, say you file a tax return, so you have 3 kids, who knows, but
maybe all have the same name, like there's John Michael Sr., John Michael Jr.,
or
John Michael
no, it's usually
and the third.
The IRS doesn't, names matter, don't get me wrong, but they always match social security numbers. That's how it goes through the system, is through socials. So if you put in like John M. Kledis 10 times, that won't kick it out as quickly as...
But they also recycle social security numbers. And that's why some people have the social security of some deceased person.
Maybe, yeah. But identity theft means basically like, look, we got in a tax return with the same social, filed in, for North Carolina, somebody in California. Or either that or they, there's identity theft, from companies and stuff all the time where they steal information. And one thing that fraudsters do is they file fake tax returns to get fake refunds.
Right.
So they're just like, look, something's happened here. We're getting a couple, 1 or 2 returns with this social, and we don't know which one's the real one because we're a huge organization doing millions and millions of taxpayers. So we're going to send this notice out saying, look, we're pulling it out because, we got to figure this out. And then the IRS being underpaid and understaffed and overworked, it takes them a while to get to it. So they're basically spitting out this notice saying, look, this has been flagged for potential identity theft, but it may be 6 months before they finally get somebody to look at it. And it doesn't mean that this whole time they're digging through files to look at it. It just means it's been on the pile on some guy's desk for 6 months and he finally looked at it and it took him 5 minutes to figure out the problem. But that's just the way the IRS works. It's very slow like that because once something gets kicked out that an actual human being has to do something about it, the process slows down exponentially. The scary one is what we call letter 2205, and that is saying that your return has been selected for examination. Another word for examination is audit. That means you're going to get audited.
Oh, yeah.
And then following that, you'll get a letter 525, which is an examination report. But you'll get these, if you get audited, obviously contact your tax preparer if you have one. If not, contact somebody that does representation.
What happens if you ignore that notice?
They will, depending on what they are auditing for, they're just assume, the best benefit to the government at that point. And say they're auditing because they don't know something about your Schedule C. You have deductions on your Schedule C. Then they're just say, okay, well, we're going to take away all the deductions and count all it won't be to your benefit if you ignore it. Then it's all their say. But generally what they do when you get an examination letter, they're say, look, we're examining your 2017 tax return, and they'll give you a list of things that they're requesting. It's, bank statements, financial reports, whatever. So, and you got 30 days and you can always write a letter saying, look, we need more time, and they will grant you more time to get it depending on what they need. But long story short, you just get everything they're asking for or as much as you can on what they're asking for and give it to them. They say, we want mileage logs. We want, expenses. We want to see all this. And you give them what I call the kitchen sink. You give them all this stuff and they're asked for a bunch of stuff, but in reality, they only are carrying or auditing this one specific thing, but you don't know that. But they're auditing, you give them everything, and then when you finally get into the audit and talking to the auditor, they're really just concerned about like this Schedule C, and that's it. They don't care about your rental properties or anything else.
So you do all this work, and then really they just wanted one little thing. Why couldn't they just go straight for that?
Because they want to have all the arrows in their quiver. They want to have like, well, this leads to this. They want to have all the information in front of them.
Mm-hmm.
So and it's kind of standard. They ask for a bunch, and you don't. And it's also they don't want to let you know what they're asking, because the old adage, don't answer the question unless you're being asked, and they just are like, look, we're auditing you. Give us all this, and most audits I've seen have come from state agencies. That's where most of them come from. The IRS state agencies do the heavy lifting when it comes to audits, and then the IRS just kind of follows suit and say, okay, well, the state agency audited you and denied your Schedule C, so you either got to amend the tax return to the IRS and saying, due to a state audit, the Schedule C is denied, here's the changed return. Or they'll get a letter from the state saying, we audited them, this is our findings, and then you'll get a notice from the IRS saying, well, you owe us some more tax or whatever because of that. But examinations are scary and understandably so, but I would characterize it more as like a very inconvenient, very, very big nuisance as opposed to scary. It doesn't mean that, they think you're breaking the law.
You mean from a small business, maybe individual perspective?
Well, from just
because, if you're a big old corporation, that's no joke.
Well, it's no joke from anybody's perspective.
Mm-hmm.
But I'm saying most people think, they're auditing me, I'm going to jail. Yeah. because I went to Starbucks that one time and I didn't keep the receipt. That's what scares them. But what they're doing is they from their defense, they're just trying to substantiate what you put on your tax return.
Right.
So you do the best of your ability to substantiate that. And if you can't substantiate all of it, then they'll probably just deny you on the expenses that you can't substantiate. And yeah, there's a monetary result of that because you got to pay more tax. You got to pay a tax preparer a lot of money to help represent you and talk to so representation, tax preparers, or people that represent you, enrolled agents, attorneys, CPAs, we can get what we call a power of attorney from the IRS and from the state agencies.
And turn it over to you to worry about.
And I can go meet with the auditor. I can talk to them on the phone. I can give them everything. They can talk to me, and you don't even have to talk to them. Mm-hmm. But you're paying us for that time to do that. So there is that monetary result. And that person, it's not guaranteed that they're going to go through this audit and make it go away. It could be that they go through this audit and you still owe all this tax and that it was still unsubstantiated. From a tax preparer, you can give a tax preparer a listing of income and expenses and they can put it on your return, but it's your responsibility as the taxpayer to substantiate that. Just because you had a tax preparer do it for you doesn't mean that suddenly that tax preparer, it's their duty to substantiate that. The tax preparer is a conduit between you and the tax return. They're not the verification source. Now, tax preparers have a ethical duty to ask questions if they don't think it sounds right. But if you say, hey, this was my cell phone bill for the year and this was my mills for the year, and you give them a listing of expenses, it's totally okay for the tax preparer to take those numbers, put them on the return. If you get audited and the IRS is like, I want to see you put $5,000 from mills, I want to see the receipts and stuff, then that's on you to come up with that. And that tax preparer can kind of help organize it and make sure it ties to the return or whatever. But it doesn't mean because you had your tax return professionally prepared that it's audit proof by any means. And it also, to defend tax preparers out there, doesn't mean that they did anything wrong or it's on them. It's just they're questioning your return. Audits happen sometimes completely randomly because you did absolutely nothing wrong. You just happened to be the stick they drew out of the needle they drew out of the haystack. You just happen to get the bad draw. Sometimes you get audited because your employer got audited and they're looking at the W-2s because the employer was deducting a whole bunch of W-2s. So they're making sure your W-2 was right, or you're somebody that gave you a 1099, they're auditing everybody they gave 1099s to because the 1099s were wrong for many reasons. And you won't know that until you talk to your other colleagues and be like, oh, I work for the same people and all of them got audited. It's because that, it trickled down from there. They don't tell you we're auditing you because you never really hear that. You might hear when you're having a conversation with an auditor that they're focusing on certain aspects, of course. But, there's situations where I've heard organizations that get audits and it trickles down. Am I rambling, Mari?
Just a little bit. It's actually very helpful because unfortunately, I'm sure there's plenty of people out there that get these notices about audits and they freak out or, you're just kind of waiting for the day that you do get it. So, okay. So that was a very good overview about tax notices. Anything else that you think we've missed in this discussion?
Yeah. I mean, just the bottom line is tax notices, don't panic. Audits are understandably scary. Don't let it scare you too bad. It just means you got to deal with it. Deal with notices, talk to your tax preparers, and read the notice and don't panic. And
then call John Michael.
And call me. So I do representation.
He'll do all the panicking for you.
Yeah. Well, I overthink, as Maury says, and that's my job to overthink all the aspects. And every auditor I've ever dealt with has always been very nice, and they're very human.
Are you saying this for the record?
I'm saying it. It's because it's true.
I'm sure most people don't see it that way when they're on the other side of the table.
Yeah, I mean, but you got to remember. I
wouldn't want to be an auditor, but I do know some, so yeah.
Yeah, you got to remember humans are humans on both sides of the table.
Yeah, there's just nicer ones and then not so nice ones.
Or, I mean, everybody realizes they've got their job to perform. They understand as if you're representing your
And
taxpayer.
hopefully they're not paid like on commission, like by the IRS.
No.
Hey, the more money you get out of this individual, the more you get paid.
That would be horrible. That would
Okay.
probably change their personality a little.
So we will wrap this up to say, we will clarify, tax auditors do not get paid on commission. So let's clarify
That we know of.
that we know that, right?
Yeah, I think.
Okay. So other than that, anything else to add?
I guess not. I mean, probably, but
Well, thank you. That was very informative and helpful. And I know that lots of people out there are probably finding this very interesting. And you'll find it interesting when you get a tax notice. You're going to go, aha, I remember there was a podcast about that. And you'll go back and listen to it and you'll feel a lot better.
and you're welcome to call me, email me if you have any random questions about tax notices and how to deal with them. You're welcome to reach out to me at Peridot.
So thank you for joining us today. Please be sure to review this episode. And for more information on who we are or this podcast, please visit www.bammit.com. That's BAMM-IT.com.
And what are we talking about next?
Oh yeah, we're going to talk about something equally as maybe not that interesting. And
Well,
that
Maury,
is-
we're selling this podcast great.
this is
All
called,
these non-interesting podcasts we're doing.
Well, the next one is on Google location cards. I call them location cards because that's what they originally were called. So we're going to get into that.
Okay, sounds interesting.
The hosts and the guests of this podcast make no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice and is for entertainment purposes. It is not guaranteed that you will find this as entertaining as the hosts find themselves.